to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertow, that knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, a superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
All right. Welcome back, guys. Sorry. I took a small Diablo break. I was playing Diablo. And then I saw the market going crazy, if you know the truth. Marantz is a man, living all this YouTube action, live streams. What's up? Doing my best, bro. Doing my best. You guys, you'll know when I get the green light to be here. But I'm just doing what I can while I'm here. All right, so we got a lot to look forward to right now. I'm already registered for the earnings call. The earnings call is at 2 o'clock, so in about 30 minutes. I'm just giving people time to get in here for this call. Right now, the market reacted pretty negatively to the first sheet that dropped. Let's go ahead and see if we can get that. It could be in a 10Q or an 8K. We'll see. Or in a press release, right? So we'll see what it says here. Current filing, it's already out. Let's go look at it. Boom, I got it. I got you, babe. The market will recover. We'll find out. Don't worry, the price is up there in the right-hand corner. You know, I got to see something really quick because it's really small. Do you see that? The 178 type style. So it's $3 under. If you don't know, it's about $75 billion. There's 24 billion shares of Nvidia. So when there's a dollar move, that's 25 billion. It's a quarter of, of 100 billion, but it's a significant number. That's my point. Let's see what we got here. Make that a little bigger so you can read it. All right, and we're good to go. Thanks again, guys. All love and support of the channel. Appreciate you guys. I see you guys are back there. Doing my best, There's a lot to learn about markets. There's a lot to learn about companies and the way they're run. This is a little different. A lot of people know why I'm skeptical of mark-to-market accounting. Mark-to-market accounting, they have this, it's called HFV, and it's hypothetical financial value, right? Finance value. You literally can make up any number. It wouldn't matter. You just have to make sure that you can keep making up a new number every quarter. Basically, it's what's happening here with Nvidia. Nvidia could have orders of chips and or never deliver, never receive a payment. It wouldn't matter. They already claim the revenues on the stat line. And this is something that Enron did in 2001, 2000. And this is why Arthur Andersen doesn't exist anymore. It was an accounting firm or an auditing firm that allowed the practice to happen and not follow through on it. Now, I get it. They're a lot more regulated now. Maybe it's a lot more transparent. But the truth is, the CapEx number that people are pledging, they're pledging towards Nvidia. It's hard to find value for obsolete things, even though you're buying the product that said chips and you need them. I mean, there's only one designer right now. It's Nvidia. So these AI chips, And, the data centers that people are building, whether they're using chassis from super microcomputers or Albacore, or they're partnered up with HP and Dell, everyone's looking for a way to get this all put out there. It reminds me of the dot-com bubble when you wanted fiber optics and you wanted to have the whole world connected through the internet, and technology changed. And technology said, you don't need a landline, or you can do one landline, but you can also just shoot it out, Wi-Fi. And that's when it really hit the roof, because you no longer had to pay for the infrastructure. You just had satellites and phones. Everybody got it. And it was a whole nother world. So, 5G network, and you just saw AT&T paid $30 billion on a merger. Yeah, money's out there for infrastructure, but like I've told you about infrastructure and the way you giving value to the assets themselves. Nvidia should be, and I'm going to say this very candidly to everyone, Nvidia and the Mag 7 should be giving valuation like housing. Yes, they're quality companies. Yes, they do have growth, and yes, they do have income finance, but the way you give value to housing is an asset appreciates over time. And these are asset-driven companies. They are spending money on plants and property, this is the category, and equipment, and that is appreciating in value. The money being spent is being awarded valuation. I've never seen it this way, because plant and property and assets don't have a multiple. Earnings do. But all the earnings in the world are getting cashed out. They're doing share buybacks. They're pumping their own stock. I'm talking about hundreds of billions of dollars a year. So when you see Nvidia sitting here and every insider is selling after 25 years of holding, yeah, they can, but like I said, it's mark to market. So we're going to hear just how great this market is coming up right now. And we'll find out if I'm a believer. We'll do it that way. Hey, you snuck in another live. Yeah, I was sitting here. I still haven't eaten, though. So I think I'm going to go get a snack right now while we watch for this to happen. While that goes on, I was playing Diablo. Let me close that out. I played Diablo 2 Resurrected. I'm out there grinding just for fun. I actually play for other people. I don't even play for myself, because I just try to go level up, or I try to go look for items for other people. I just want to make their day. Honestly, it's like I'm YouTubing. I go over there and I have like all these great items. I roll up on somebody. I go, hey man, you want some help? And I just drop them like a godly item, and I walk away, and they'll never know where it came from, and they'll never get it. But yeah, I got to eat real quick, so I'll be right back. If you guys want to know what I'm going to play while I'm gone, well, you'll figure it out. I'll be right back.
To the GME community, it's been a long battle. Fudge, shills, corrupt hearings, corrupt politicians and regulators, smoke and mirrors, and a front row seat to the greatest clown show on planet Earth. Hey yo, whoops, let's get it, they ain't ready. About to open up a can on Mafia Don Kennedy. Short position heavy, you walk the edge of machete. The premiums, I bet margin is calling them already. And Jeff Yas taking the loss, Susquehanna going down to the tune of Ricker Spades and bananas. Wonder how much stamina Mafia got left. Gonna bind DRS till we reach you to death. DTCC, screw the brooch, big time. Jaw, you something the big doodle this time. Processing the split, wrong delivery. In the words of Wooch, couldn't deliver it. So they splitting it absent, the dividend. Way to let us know that the MOAS is imminent. So evident, overwhelming the evidence. Share swim infinity pool as forever, man.
We buy GME to DRS. Our shares is our destiny.
By holding DRS, we're golden.
We buy GME to DRS. Our shares is our destiny.
Bought up all the synthetic shares, they short sold them.
Yeah, time to deliver it. Hands turning straight into diamonds. They're shimmering. Smile on the air, but behind scenes they're quivering. Games coming soon with the mutable and it's simmering. Yeah, and I can't wait till they release that. On the marketplace, collect the pieces like I'm B-Strat. And you know I need that. Come and spin the wheel like Kyoto. GME run the game and you know so. I'm on a rant like Marantz. The financial situation of the shorts is advanced. It's a sham, it's a mockery. A land full of gluttony. Victor in California told Jimmy Chill to suck on these. These ones are just a gentle tease. They short the ETFs, rack up the STDs. Feels like I'm on DMT, Wooch and DMT, shout out to DFB, I be like
we buy GME to DRS, our shares is our destiny.
By holding DRS, we're golden.
We buy GME to DRS. DRS, our shares is our destiny.
Bought up all the synthetic shares, they short sold them.
Sold them, I hold them while it's getting swollen. Daniel W.S. got the memes of the Cohen. Dave Lowry, the investors are so emboldened. Take back the power, collectors are in control. And time to get busy. Tinfoil theories, dizzy market dilly. Super stock broken down, get the word around town. Wooch and DMT up in the ears, turn it up now. And holler what now?
Swinging around, go for chops like Kung Pao. The more ass coming, the world be like, wow. Not looking pretty for finance committee. Time to wake up, Keith, Rory, Kitty right now. Tried to warn media looking the other way. They like, there is no war here in Ba Sing Se. I'm like, okay, don't escape Pompeii. There's a fork in history, you headed the wrong way.
We buy GME to DRS, our shares is our destiny.
By holding DRS, we're golden.
We buy GME to DRS, our shares is our destiny.
Bought up all the synthetic shares, they short sold them. By holding DRS, we're golden. By holding DRS, we're golden. Welcome to Marantz Rantz. No advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold. That knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence. Know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all. The wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, a superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
Oh, you got me, Carter? You got me? I got you, bro. This boy Carter's corner pocket opened up a $500 card, and it was a $500 card, if not better. Then he got a $100 card. It was a $100 card, if not better. My boy's batting 1,000. That's all I can say about Carter's Corner Pocket. Go check out his live stream. Go check out his YouTube, guys. He supports GameStop. Carter's Corner Pocket, better known as CCP, not to get confused with the Chinese Communist Party. He picked the letters, not me. Hey, shout out right now. We're going to do a victory lap real quick. Hey, guys, really deep show. Really deep show because I'm in my feels about some stuff. I'm in my feels about certain content creators lying, and I'm like, yo, I got to set the record straight. But then before we even do that, I mean, I've got to talk to you about love and hate. You see, I actually called the show Love and Hate today because there's some things out here about the market that actually make you think about love and hate. So let me give you the example. When you love something, you do it unconditionally, or at least you try, right? When you love something, you're like, oh, baby, yeah, you look good. No, I like that skirt. Man, I like that shirt. Oh, your hair, I noticed right away. Yeah. Let me tell you about loving something. Right now, this stock market is completely in love with itself. You have a stock market that hasn't had a correction in 16 years, give or take. Maybe a day or two, maybe a moment or two, but not a real correction. Not a real, hey, wake up and smell the roses. What you see right now is a likability. I like something. I like that stock. I like the idea of this company. I don't need proof. I don't need results. I just need to like something. I'm going to invest on an idea, as a matter of fact. I like it. Love turns into, I love it. I'm in a bullish market. I can't lose. Matter of fact, I'm so good at investing. And this small window, via the pandemic to now, I could drop out of school. I could quit my job. I can get as little money as I have, and I can become a day trader. I can make profits that everyone else makes because I love it. I'm living in a market that I love. I love tech stocks. I love AI stocks. I love Palantir. I love Nvidia. Their earnings are this afternoon. Everybody loves this market. You can't lose. This is a no-brainer. All the guys walking on Wall Street are with their hands out saying, this shit's easy. We can make money top and bottom. Doesn't matter how much debt they push out. Doesn't matter how expensive this market is. The average return of the S&P 500 over the last 100 years is 10%. Every year, 10%. Boom, boom, boom. Yet some years are 30, some years are 20, some years even might be 40, and then some are none, some are negative. But in between getting all those percentages correctly, you have to feel this way, that the percentages might be 20% last year, 20% the year before. You're due for a downtick. Maybe it's not going to happen. We've never had 4 years in a row of winning anytime this century. So what do you do now? Do you give value for where the market's at? Because what correlates with percentages of return are PE ratios. The higher the PE ratio goes, the return is less naturally because, hey, things are more expensive and or it's going to take longer to get that return, right? Are you tracking right now? I hope you are, because in the history of the market, we haven't had a 10-year cycle right now, like a PE ratio as high as this, maybe 3 times in your whole lifetime. 3 times in the whole history. I can't say lifetime. You know why? Because Grandma Nina had a direct effect on me growing up. I've been with my wife 18 years. I met this older lady who had lived it, who understood it. And I was like, babe, why is she so good on her credit? Why does she have so much money in a coffee can underneath the mattress? Why does she say don't put all your eggs in a basket, right? You guys all know to save money for a rainy day. Why? Because her parents lived through the Great Depression. And that generational mindset got passed on. Hey, protect your wealth. Don't spend it. Defend it. Think about the generations that we're living with right now. These spoiled brats, these guys who actually made the market themselves. These old timers, these baby boomers who bankrupted the economy in the 80s, who did the bullshit, are now retiring and dying. And their kids who are silver spoon, who've only won and they've never lost. They didn't see the losses coming. You know why, guys? I'm going to tell you something about this market and about why the rich people are walking around and investing money at the top of the market, and all things are green. Life is good out here. I'll tell you why, okay? You guys remember The Big Short, right? Dr. Michael Burry. One dude, a couple of other dudes, a handful of people, they make a book and a movie, and they say, these guys saw the market that no one else saw. Because everybody was blinded by it. We're spending money. The economy's churning. There's no telltale signs of excess. There's no telltale signs of stress. It doesn't hurt your pockets. You know why the rich don't see it? Why Donald Trump can't figure it out? Why any other hedge fund guy can't figure it? Because they're millionaires. They don't see what we see. You see, we have this social media. We have this interaction. We have the info, guys. We're the media, the people. We're the strippers at the club saying, yeah, groceries are expensive. I don't care what you don't see in the sky. Just because you don't see skyscrapers being built, you don't see, these big-ass cranes putting in AC units. Oh, you don't see it? So they must not be building. No, everybody, no one's overextended. No one's overspending. Look again, because the roaring crowd is loud. We might be early, and in the world of being right and wrong, I get it. Trust me. I invested with GameStop 5 years ago. I've had every member in the whole world tell me I was right about all these other investments except for GameStop. Because when you're right over a long period of time, technically you've been wrong, right? No, it just took time. But the conviction of me being right is never going to be explained to people. I can't go up, yeah, I've been right about that shit for 5 years. Think about it. Ryan Cohen one day is going to get in front of the press. Going to get in front of the press. GameStop, greatest company. Look at all this money. You're going to see it. And guess what the press is going to do? The headline. Overnight success. A GameStop overnight success. Yeah, I'm a 5-year overnight success on YouTube, man. Finally figured it out. Finally got it out right. Finally found the message I wanted to push. Got around what private equity was. I'm an overnight success, babe. 5 years later, shit. Woo. Give me a pat on the back. You see the crash coming. Everybody else sees it, but hey, you can't call it out right now because the markets are just a little bit heavy. They're not overvalued. They're not overextended. You know, liking something too much, loving something too much blindly, you start doing things that you normally wouldn't do. No one's really mitigating the risk. Remember, these financial bros, this is how they live. They live off of this money. I don't live off of this money. Oh, update. $30,251.19 into GameStop. I have 1,229.974 shares. I got my card. It got it in the mail. Look at that. Pop Stars. I'm not even cracking it open. I'm leaving it there. 8.5. Yeah, I don't care. Celebrations, 8.5. I'll keep it, bro. I love it. I love this look. I was meant to have the cuates in the back. Yo. Are you understanding what's happening, guys? And why people don't get... Damn, my show was good this morning. Oh, man. It's always Coke Zero in the cup, bro. Always Coke Zero in the cup. Sorry, thanks for the break, guys. That was some verbiage from the live stream this morning. You know, we were educating some fools. Edumacation 101, Stock Talk. It's free. Free life advice, too. 11 minutes. It rocked? Thanks, bro. 11 minutes, and then we'll hear this earnings call. It's a recorded earnings call, whatever the hell it is. We'll see how it goes down. Nvidia, bunch of clowns. They are shitting right now. They're losing. They're already down $7, $6 a share, which is about $175 billion. I was looking for a $280 billion swing, either top or bottom. I think I said that during the live. But let's go ahead. Excuse me. Oh, that's not looking very bullish, is it? You might find the bottom here. Coke Zero isn't healthy. Only a regular Coke for me. Yeah, I just got them in the house, bro. It's just one of those things. All right, let's talk it out. Here's the update from Nvidia. Okay, their 8K that they released. It says here revenue is up 6% quarter one from quarter one, which they're up 6%. And it says 56 from a year ago. We don't care about a year ago. We care about from quarter to quarter. Since you're front loading all your numbers, I want to know if you have anything new. If you're increased 6%, that's not going to be enough. There's not enough in a 6% increase, just so that we're clear, guys, for dividends, share buybacks, and whatever else you want to do. Okay? I'm just telling you, 6% is not enough. And I'll show you why it's not enough. Okay, as I go through here, this is the part you guys don't need to pay attention to right here. During the first half of the fiscal year 2026, Nvidia returned $24.3 billion to shareholders in the form of share repurchases and cash. Okay, guys, 24.3. If you're up 6% from one quarter to the next, how much of that money are you actually spending on your company? Zero. Basically zero. Or you're not, I mean, all you're doing is paying it back to your executives. As of the end of the second quarter, the company had $14.7 billion remaining under its share repurchasing authorization. But just yesterday, Nvidia voted, the board of directors, for an additional $60 billion in company share repurchase authorization without expiration, meaning they're going to pump their own stock. This is what I'm talking about. This is sheer greed. You're the creator of everything. And you think $60 billion at the top valuation of your stock, I mean, we're talking about stretched thin. We're going to buy $60 billion of this? It sounds like a defense tactic. That's what it sounds like. It sounds like we're willing to come down, retest, and I see a drop. I told you I had made this line here, 152. I haven't moved that line. I talked about that months ago. I think it can fall back down. But, I mean, you have support way down here at 138. Certainly in here. But, yeah, 152 is where I was. So we'll see, because I used these double tops here from previously. We'll see where it goes right now. I mean, people, they already got the numbers. I don't know what more you want to hear, but we'll do it. I don't have a problem with that at all. Let me see what I got. Well, what was I eating? You guys were asking. Chips and homemade guacamole. I say it that way, bro. Don't even judge me, bro. Homemade guac. Boom. Wifey be cutting it up, putting in tomatoes, onions. She's crazy, bro. Like, I have a different life because of my wife. She's beastly, bro. I will say this. I love her new job. You know, it's her dream job. She's getting the good side of it, you know. Brah. She ain't home, bro. She ain't cooking like she used to. Ah, it sucks. It's okay. It's okay. Like, I'm not mad. I respect it. I understand she's hustling. But I'm like, yo, mama. She was like, baby, I'm coming home. This is what she told me last night. She said, I'm coming home and I'm going to cook. You just clean the kitchen, do all this. So I was in there doing the dishes, cleaned the whole kitchen, table, countertops, mop, everything. I did everything. Made sure the kitchen was spotless. Took care of the dogs, the kitten, did all of that. Made sure the house was immaculate. When my wife walks through that door, she's gonna be like, "Yes, candles lit." It was awesome. She said, "Baby, I'm gonna be a little late. I'm not gonna be able to cook dinner." I said, "No problem. I'll do it. I got you." Shit. Mm. But I'm trying to cut out the pork. Oh, God. Glad you came back. CNBC clowns are still trying to pump Nvidia in a bit early. Well, we're going to find out right now. We're going to find out. Professional camerawoman. Yo, yes, she is. All right, let's look at the revenue. So revenue's up 6%, is what we called it, quarter to quarter, which is what I really care about. I don't care about year over year. You're going to call it a mega growth company, one of these mega cappers. It's everything. Let's see what it's all about. Your margins are down. Whoa, that's crazy. Operating expenses have increased, naturally. Operating income is up. What a doozy. It doesn't really make sense, though. Does that make sense? Your revenue's here. Oh, okay. Operating expenses are here. But they're not showing you how you got your margin number, because if your revenue's here and your expenses are here, how do we get way down here, right? Operating income, net income, boom. So they made $26 billion and they're going to give that all back? Yeah, we're just going to go ahead and pay that back. Share buybacks. After the first 2 quarters, what did they say? How much have they done? Oh, play lobby music? Don't play. Okay, it's coming. 2 o'clock. We got 4 minutes. We're fine. Okay, so net income right here, 30, 40, $44 million, $45 million. And they're doing how much in share buybacks? Wow. Diluted earnings per share, $1. $1 a share. Huh. And they're buying them back. That's the crazy part. Maybe I'm crazy. Excluding the H2 related charges, it releases net. Yeah, because they're counting shit they haven't even sold. That's wild, bro. You gotta be careful with this shit. This is Enron, bro. I'll say it. Yeah, nah. I mean, are they hitting the cap? Are they hitting the cap? That's all I want to know. Comes to the world's most popular enterprise servers: Disney, Foxconn, Hitachi, Hyundai Motor Group, Lilly, SAP, and the Taiwan Semiconductor are among the first to adopt the servers. Okay. This is all puff. Nobody gives a shit, bro. They have 5 customers at the top. That's it. Which will be available on Perplexity. So you're actually doing the Perplexity. Yeah. Gaming and PC. Gaming. This is the only real thing they do, okay? Remember what I tell you guys. After all that other bullshit they're doing that now, gaming. 4.3 billion. That's the real business. Launched the Blackwell-powered Nvidia 5060. Everybody's in on that shit. Good, man. I wonder if they can play video games with it now. Me, I don't care. I think I have a 3600 or something. I don't even know what I have. Okay. Automotive revenue. Automotive and robotics was up 3%. Oh my God. They're massive increases, bro, for a failed company that's just... the stock should not be going up. It shouldn't. It shouldn't go up. You can't tell me you're running the whole damn thing with 6% increases. That's going to justify whatever the hell you think it's going to justify. It's me personally. It's a systematic risk, without a doubt. What else you got here? Let's see what we got. What the hell? Cost of revenue? Research and development? They're only doing $4 billion? All that money? They're only doing $4 billion? 10% of your revenue is going back into the company. Wow. That is crazy talk. Like, what are they doing? Are they just spending it? I mean, 10.5 billion at 60? Look at that. Interest income, $592 million. Good job. Net income, net, boom, boom, boom. So they're up. They're up on this per share. Man, it's a great company, man. This is it. This is the best company in the world, guys. The best company in the world increased 6%. They increased 50% last year. 6% now. Looks like the top. Looks like the top. I mean, how many more contracts are you going to get around here? Cash and cash equivalents and cash. $56 billion added. They added 13.5 billion. Wow. They're just so magnificent. No liabilities. Look at this shit. Shareholder equity, $100 billion of shareholder equity. They have 24 billion shares. Call it 25 for fun. You mean to tell me they have $4 book? $4 book and the shares are how much? 180? They're trading at like 50 times book. What is that? 45 times book? I'm not good at math. I'm guessing the number. 45 times book. Holy Jesus. Sorry, guys. Sorry to use God's name in vain, but sheesh. They traded 100 times sales per quarter, so like 25 times sales. That's crazy too. Think about it. They're a $4.5 trillion company, and they bring in $45 million right now. $45 billion in the first 6 months. I don't know where the hell the 4.5 trillion came from, dudes. People are wild out here. Wild. Net cash provided by operating activities. Hold on. So you mean to tell me that you made $10 billion more dollars in a 3-month period, year over year, Net income, $10 billion more dollars. You brought in revenue of over 50% increase year over year for the 3 months. And at the end of all of that, you're up $900 million. What? That is awful. Accrued and other current liabilities, $4 billion. Am I missing something here? Inventories, $3 billion? Why are you guys sitting on so much inventory? Are we not selling it? It's not cool, bro. Not cool. Maybe I'm crazy. I have been a little crazy in my day. Net cash used for investment activities, $7.5 billion. They're putting it in there, get in the market, make that money. They must have some really smart people on their team. They gotta have smart people, bro. Look at this, $3 billion. All of that, and all you have is $3 billion in cash extra. Like, that's what we did. All of that, $3 billion bucks. You're talking about massive increase. I hope people know. Oh, sorry.
The new Blackwell Ultra platform has also had a strong quarter, generating tens of billions in revenue. The transition to the GB300 has been seamless for major cloud service providers due to its shared architecture, software, and physical footprint with the GB200, enabling them to build and deploy GB300 racks with ease. The transition to the new GB300 rack-based architecture has been seamless. Factory builds in late July and early August were successfully converted to support the GB300 ramp, and today, full production is underway. The current run rate is back at full speed, producing approximately 1,000 racks per week. This output is expected to accelerate even further throughout the third quarter as additional capacity comes online. We expect widespread market availability in the second half of the year as CoreWeave prepares to bring their GB300 instance to market, as they are already seeing 10x more inference performance on reasoning models compared to H100. Compared to the previous Hopper generation, GB300 NVL72 AI factories promise a 10x improvement in token per watt energy efficiency, which translates to revenues as data centers are power limited. The chips of the Rubin platform are in fab. The Vera CPU, Rubin GPU, CX9 Super NIC, NVLink 144 scale up switch, Spectrum X scale out and scale across switch, and the silicon photonics processor. Rubin remains on schedule for volume production next year. Rubin will be our third generation NVLink rack scale AI supercomputer with a mature and full scale supply chain. This keeps us on track with our pace of an annual product cadence and continuous innovation across compute, networking, systems, and software. In late July, the US government began reviewing licenses for sales of H20 to China customers. While a select number of our China-based customers have received licenses over the past few weeks, we have not shipped any H20 based on those licenses. USG officials have expressed an expectation that the USG will receive 15% of the revenue generated from licensed H20 sales. But to date, the USG has not published a regulation codifying such requirement. We have not included H20 in our Q3 outlook as we continue to work through geopolitical issues. If geopolitical issues reside, we should ship $2 to $5 billion in H20 revenue in Q3. And if we had more orders, we can bill more. We continue to advocate for the US government to approve Blackwell for China. Our products are designed and sold for beneficial commercial use, and every licensed sale we make will benefit the US economy the US leadership. In highly competitive markets, we want to win the support of every developer. America's AI technology stack can be the world standard if we race and compete globally. Notably in the quarter was an increase in Hopper 100 and H200 shipments. We also sold approximately 650 million of H20 in Q2 to an unrestricted customer outside of China. The sequential increase in Hopper demand indicates the breadth of data center workloads that run on accelerated computing and the power of CUDA libraries and full stack optimizations, which continuously enhance the performance and economic value of our platform. As we continue to deliver both Hopper and Blackwell GPUs, we are focusing on meeting the soaring global demand. This growth is fueled by capital expenditures from the cloud to enterprises, which are on track to invest $600 billion in data center infrastructure and compute this calendar year alone, nearly doubling in 2 years. We expect annual AI infrastructure investments to continue growing, driven by the several factors: reasoning agentic AI requiring orders of magnitude more training and inference compute, global buildouts for sovereign AI, enterprise AI adoption, and the arrival of physical AI and robotics. Blackwell has set the benchmark as it is the new standard for AI inference performance. The market for AI inference is expanding rapidly, with reasoning and agentic AI gaining traction across industries. Blackwell's rack-scale NVLink and CUDA full-stack architecture addresses this by redefining the economics of inference. New NV FP4 4-bit precision and NVLink 72 on the GB300 platform delivers a 50x increase in energy efficiency per token compared to Hopper, enabling companies to monetize their compute at unprecedented scale. For instance, a $3 million investment in GB200 infrastructure can generate $30 million in token revenue, a 10x return. NVIDIA's software innovation, combined with the strength of our developer ecosystem, has already improved Blackwell's performance by more than 2x since its launch. Advances in CUDA, TensorRT LLM, and Dynamo are unlocking maximum efficiency. CUDA library contributions from the open source community, along with NVIDIA's open libraries and frameworks, are now integrated into millions of workflows. This powerful flywheel of collaborative innovation between NVIDIA and global community contribution strengthens NVIDIA's performance leadership. NVIDIA is a top contributor to OpenAI models, data, and software. Blackwell has introduced a groundbreaking numerical approach to large language model pre-training. Using NV FP4, computations on the GB300 can now achieve 7x faster training than the H100, which uses FP8. This innovation delivers the accuracy of 16-bit precision with the speed and efficiency of 4-bit, setting a new standard for AI factor efficiency and scalability. The AI industry is quickly adopting this revolutionary technology, with major players such as AWS, Google Cloud, Microsoft Azure, and OpenAI, as well as Cohere, Mistral, Kimi AI, Perplexity, Reflection, and Runway, already embracing it. NVIDIA's performance leadership was further validated in the latest MLPerf training benchmarks, where the GB200 delivered a clean sweep. Be on the lookout for the upcoming MLPerf inference results in September, which will include benchmarks based on the Blackwell Ultra. NVIDIA RTX Pro servers are in full production for the world system makers. These are air-cooled PCIe-based systems integrated seamlessly into standard IT environments and run traditional enterprise IT applications, as well as the most advanced agentic and physical AI applications. Nearly 90 companies, including many global leaders, are already adopting RTX Pro servers. Hitachi uses them for real-time simulation and digital twins, Lilly for drug discovery, Hyundai for factory design and AV validation, and Disney for immersive storytelling. As enterprises modernize data centers, RTX Pro servers are poised to become a multi-billion-dollar product line. Sovereign AI is one on the rise as the nation's ability to develop its own AI using domestic infrastructure, data, and talent presents a significant opportunity for Nvidia. Nvidia is at the forefront of landmark initiatives across the UK and Europe. The European Union plans to invest 20 billion euros to establish 20 AI factories across France, Germany, Italy, and Spain, including 5 gigafactories to increase its AI compute infrastructure by
20
tenfold.
billion
In the
euros
UK,
that'll show up on the balance sheet.
The Umbard AI supercomputer powered by NVIDIA was unveiled at the country's most powerful AI system, delivering 21 exaflops of AI performance to accelerate breakthroughs in fields of drug discovery and climate modeling. We are on track to achieve over 20 billion in sovereign AI revenue this year, more than double than that of last year. Networking delivered record revenue of 7.3 billion, and escalating demands of AI compute clusters necessitate high efficiency and low latency networking. This represents a 46% sequential and 98% year-on-year increase, with strong demand across Spectrum-X Ethernet, InfiniBand, and NVLink. Our Spectrum-X enhanced Ethernet solutions provide the highest throughput and lowest latency network for Ethernet AI workloads. Spectrum-X Ethernet delivered double-digit sequential and year-over-year growth, with annualized revenue exceeding 10 billion. At Hot Chips, we introduced Spectrum XGS Ethernet, a technology designed to unify disparate data centers into gigascale AI superfactories. CoreWeave is an initial adopter of the solution, which is projected to double GPU to GPU communication speed. InfiniBand revenue nearly doubled sequentially, fueled by the adoption of XDR technology, which provides double the bandwidth improvement over its predecessor, especially valuable for the model builders. The world's fastest switch, NVLink, with 14x the bandwidth of PCIe Gen 5, delivered strong growth as customers deployed Grace Blackwell NVLink rack-scale systems. The positive reception to NVLink Fusion, which allows semi-custom AI infrastructure, has been widespread. Japan's upcoming Fugaku Next will integrate Fujitsu's CPUs with our architecture via NVLink Fusion. It will run a range of workloads, including AI, supercomputing, and quantum computing. Fugaku Next joins a rapidly expanding list of leading quantum supercomputing and research centers running on NVIDIA's CUDA-Q quantum platform, including ULIC, AIST, NNF, and NERSC, supported by over 300 ecosystem partners, including AWS, Google Quantum AI, Quantinium, QEra, and PsiQuantum. Jetson Thor, our new robotics computing platform, is now available. Thor delivers an order of magnitude greater AI performance and energy efficiency than NVIDIA AGX Orin. It runs the latest generative and reasoning AI models at the edge in real time, enabling state-of-the-art robotics. Adoption of NVIDIA's robotics full-stack platform is growing at rapid rate. Over 2 million developers and 1,000 plus hardware, software applications, and sensor partners taking our platform to market. Leading enterprises across industries have adopted Thor, including Agility Robotics, Amazon Robotics, Boston Dynamics, Caterpillar, Figure, Hexagon, Medtronic, and Meta. Robotic applications require exponentially more compute on the device and in infrastructure, representing a
This
significant
woman is
long-term demand driver
terrible.
for our data center platform.
Is this real?
Nvidia Omniverse with Cosmos.
Bros, I will fall asleep right in front of you with this lady. Swear to God. Is she AI?
This quarter, we announced a major expansion of our partnership with Siemens to enable AI automatic factories. Leading European robotics companies, including Agile Robots, Neuro Robotics, and Universal Robots, are building their latest innovations with the Omniverse platform. Transitioning to a quick summary of our revenue by geography. China declined on a sequential basis to low single digits percentage of data center revenue. Note, our Q3 outlook does not include H20 shipments to China customers. Singapore revenue represented 22% of second quarter's billed revenue as customers have centralized their invoicing in Singapore. Over 99% of data center compute revenue billed to Singapore was for US-based customers. Our gaming revenue was a record $4.3 billion, a 14% sequential increase and a 49% jump year on year. This was driven by the ramp of Blackwell GeForce GPUs as strong sales continued as we increased supply availability. This quarter, we shipped GeForce RTX 5060 desktop GPU. It brings double the performance along with advanced ray tracing, neural rendering, and AI-powered DLSS4 gameplay to millions of gamers worldwide. Blackwell is coming to GeForce Now in September. This is GeForce Now's most significant upgrade, offering RTX 5080 class performance, minimal latency, and 5K resolution at 120 frames per second. We are also doubling the GeForce Now catalog to over 4,500 titles, the largest library of any cloud gaming service. For AI enthusiasts, on-device AI performs the best RTX GPUs. We partnered with OpenAI to optimize their open source GPT models for high quality, fast, and efficient inference on millions of RTX-enabled Windows devices. With the RTX platform stack, Windows developers can create AI applications designed to run on the world's largest AI PC user base. Professional visualization revenue reached $601 million, a 32% year-on-year increase. Growth was driven by an adoption of the high-end RTX workstation GPUs and AI-powered workload like design, simulation, and prototyping. Key customers are leveraging our solutions to accelerate their operations. Activision Blizzard uses RTX workstations to enhance creative workflows, while robotics innovator Figure AI powers its humanoid robots with RTX embedded GPUs. Automotive revenue, which includes only in-car compute revenue, was $586 million, up 69% year-on-year, primarily driven by self-driving solutions. We have begun shipments of Nvidia Thor SoC, the successor to Orin. Thor's arrival coincides with the industry's accelerating shift to vision, language, model architecture, generative AI, and higher levels of autonomy. Thor is the most successful robotics and AV computer we've ever created. Thor Willpower. Our full-stack drive AV software platform is now in production, opening up billions to new revenue opportunities for NVIDIA while improving vehicle safety and autonomy. Now moving to the rest of our P&L. GAAP gross margin was 72.4%, and non-GAAP gross margin was 72.7%. These figures include a $180 million or 40 basis point benefit from releasing previously reserved H20 inventory. Excluding this benefit, non-GAAP gross margins would have been 72.3%, still exceeding our outlook. GAAP operating expenses rose 8% and 6% on a non-GAAP basis sequentially. This increase was driven by higher compute and infrastructure costs, as well as higher compensation and benefit costs. To support the ramp of Blackwell and Blackwell Ultra, inventory increased sequentially from 11 billion to 15 billion in Q2. While we prioritize funding our growth and strategic initiatives, in Q2, we returned 10 billion to shareholders through share repurchases and cash dividends. Our board of directors recently approved a 60 billion share repurchase authorization to add to our remaining 14.7 billion of authorization at the end of Q2. Okay, let me turn it to the outlook for the third quarter. Total revenue is expected to be 54 billion, plus or minus 2%. This represents over 7 billion in sequential growth. Again, we do not assume any H20 shipments to China customers in our outlook. GAAP and non-GAAP gross margins are expected to be 73.3%, 73.5% respectively, plus or minus 50 basis points. We continue to expect to exit the year with non-GAAP gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately 5.9 billion and 4.2 billion, respectively. For the full year, we expect operating expenses to grow in the high 30s range year over year, up from our prior expectations of the mid-30s. We are accelerating investments in the business to address the magnitude of growth opportunities that lie ahead. GAAP and non-GAAP other income and expenses are expected to be an income of approximately 500 million, excluding gains and losses from non-marketable and public held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial data are included in the CFO commentary and other information available on our website. In closing, let me highlight upcoming events for the financial community. We will be at the Goldman Sachs Technology Conference on September 8th in San Francisco. Our annual NDR will commence the first part of October. GTC Data Center begins on October 27th, with Jensen's keynote scheduled for the 28th. We look forward to seeing you at these events. Our earnings call to discuss the results of our third quarter of fiscal 2026 is scheduled for November 19th. We will now open the call for questions. Operator, would you please poll for questions?
Oh, thank God.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Thank you.
First question.
Your first question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Oh, Cantor
Yeah,
Fitzgerald.
good afternoon. Thank you for taking the question. I guess with wafer in to rack out lead times of 12 months, you confirmed on the call today that Rubin is on track for ramp in the second half. And obviously, many of these investments are multi-year projects contingent upon power, cooling, et cetera. I was hoping perhaps you take a high-level view and speak to your vision for growth into 2026. And as part of that, if you can kind of comment between networking data center would be very helpful. Thank you.
High-level view.
Yeah, thanks, CJ. At the highest level of growth drivers would be the evolution, the introduction, if you will, of reasoning agentic AI. Where chatbots used to be one shot, you give it a prompt and it would generate the answer. Now the AI does research, it thinks and does a plan, and it might use tools. And so it's called long thinking. And the longer it thinks, oftentimes it produces better answers. And the amount of computation necessary for one shot versus reasoning agentic AI models could be 100 times, 1,000 times, and potentially even more as the amount of research and basically reading and comprehension that it goes off to do. And so the amount of computation that has resulted in agentic AI has grown tremendously. And of course, the effectiveness has also grown tremendously. Because of agentic AI, the amount of hallucination has dropped significantly.
Hallucination.
It can now use tools and perform tasks.
They're hallucinating.
Enterprises have been opened up. As a result of agentic AI and vision language models, we now are seeing a breakthrough in physical AI, in robotics, autonomous systems. So the last year, AI has made tremendous progress. And agentic systems, reasoning systems, is completely revolutionary. Now, we built the Blackwell NVLink 72 system, a rack scale computing system for this moment. We've been working on it for several years. This last year, we transitioned from NVLink 8, which is a node scale computing. Each node is a computer, to now NVLink 72, where each rack is a computer. That disaggregation of NVLink 72 into a rack scale system was extremely hard to do, but the results are extraordinary. We're seeing orders of magnitude speed up, and therefore energy efficiency, and therefore cost effectiveness of token generation.
Oh, dude, I gotta
because
go.
of NVLink 72.
Shit.
And so over the next couple of years, you're gonna you asked about longer term. Over the next 5 years, we're gonna scale into, with Blackwell, with Rubin, and follow-ons, to scale into effectively a $3 to $4 trillion AI infrastructure opportunity. The last couple of years, you have seen that CapEx has grown in just the top 4 CSPs has doubled and grown to about $600 billion. So we're in the beginning of this build out, and the AI technology advances has really enabled AI to be able to adopt and solve problems to many different industries.
Your next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my questions. Colette, just wanted to clarify the $2 to $5 billion in China. What needs to happen, and what is the sustainable pace of that China business as you get into Q4? And then Jensen, for you on the competitive landscape, several of your large customers already have or are planning many ASIC projects. I think one of your ASIC competitors, Broadcom, signaled that they could grow their AI business almost 55-60% next year. Any scenario in which you see the market moving more towards ASICs and away from Nvidia GPU? Just what are you hearing from your customers? How are they managing this split between their use of merchant silicon and ASICs? Thank you.
Thanks, Vivek. So let me first answer your question regarding what will it take for the H20s to be shipped. There is interest in our H20s. There is the initial set of licenses that we received. And then additionally, we do have supply that we are ready. And that's why we communicated that somewhere in the range of about $2 to $5 billion this quarter, we could potentially ship. We're still waiting on several of the geopolitical issues going back and forth between the governments and the companies trying to determine their purchases and what they want to do. So it's still open at this time, and we're not exactly sure what that full amount will be this quarter. However, if more interest arrives, more licenses arrives, again, we can also still build additional H20 and ship more as well.
NVIDIA builds very different things than ASICs. But let's talk about ASICs first. A lot of projects are started. Many startup companies are created. Very few products go into production. And the reason for that is it's really hard. Accelerated computing is unlike general purpose computing. You don't write software and just compile it into a processor. Accelerated computing is a full stack co-design problem. And AI factories in the last several years has become so much more complex because of the scale of the problems have grown so significantly. It's really the ultimate, the most extreme computer science problem the world's ever seen, obviously. And so the stack is complicated. The models are changing incredibly fast, from generative based on autoregressive to generative based on diffusion to mixed models to multimodality. The number of different models that are coming out that are either derivatives of transformers or evolutions of transformers is just daunting. One of the advantages that we have is that NVIDIA is available in every cloud. We're available from every computer company. We're available from the cloud to on-prem to edge to robotics on the same programming model. And so it's sensible that every framework in the world supports NVIDIA. When you're building a new model architecture, releasing it on NVIDIA is most sensible. And so the diversity of our platform, both in the ability to evolve into any architecture, the fact that we're everywhere, and also we accelerate the entire pipeline. Everything from data processing to pre-training to post-training with reinforcement learning, all the way out to inference. And so when you build a data center with NVIDIA platform in it, the utility of it is best. The lifetime usefulness is much, much longer. And then I would just say that in addition to all of that, it is just a really extremely complex systems problem anymore. People talk about the chip itself. There's one ASIC, the GPU that many people talk about. But in order to build Blackwell, the platform, and Rubin, the platform, we had to build CPUs that connect fast memory, extremely energy efficient memory for large KV caching necessary for agentic AI, to the GPU, to a super NIC, to a scale up switch we call NVLink, completely revolutionary. We're in our 5th generation now, to a scale out switch, whether it's quantum or Spectrum X Ethernet, to now scale across switches so that we can prepare for these AI super factories with multiple gigawatts of computing all connected together. We call that Spectrum XGS. We just announced that at Hot Chips this week. And so the complications, the complexity of everything that we do is really quite extraordinary. It's just done at a really, really extreme scale now. And then lastly, if I could just say one more thing, we're in every cloud for a good reason. Not only are we the most energy efficient, our perf per watt is the best of any computing platform. And in a world of power limited data centers, perf per watt drives directly to revenues. And you've heard me say before that in a lot of ways, the more you buy, the more you grow. And because our perf per dollar, the performance per dollar is so incredible, you also have extremely great margins. So the growth opportunity with NVIDIA's architecture and the gross margins opportunity with NVIDIA's architecture is absolutely the best. And so there's a lot of reasons why NVIDIA is chosen by every cloud and every startup and every computer company. We're really a holistic, full stack solution for AI factories.
Guy
Your
is
next
just
question
full of shit,
comes
bro.
from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about your 3 to 4 trillion in data center infrastructure spend by the end of the decade. Previously, you talked about something in the 1 billion range, which I believe was just for compute by 2028. If you take past comments, 3 to 4 trillion would imply maybe 2 billion plus in compute spend. And just wanted to know if that was right, and that's what you're seeing by the end of the decade. And wondering what you think your share will be of that. Your share right now of total infrastructure, compute-wise, is very high. So wanted to see, and also if there's any bottlenecks you're concerned about, like power, to get to the 3 to 4 trillion. Thanks a lot.
Yeah, thanks. As you know, the CapEx of just the top 4 hyperscalers has doubled in 2 years. As the AI revolution went into full steam, as the AI race is now on, the CapEx spend has doubled to $600 billion per year. There's 5 years between now and the end of the decade.
You think they're going to do?
And $600 billion only represents the top 4 hyperscalers.
You got to stop this
We
shit,
still have
dude.
the rest of the enterprise companies building on-prem. You have cloud service providers building around the world. United States represents about 60% of the world's compute, and over time, you would think that artificial intelligence would reflect GDP scale and growth, and would be of course accelerating GDP growth. And so our contribution to that is a large part of the AI infrastructure. Out of a gigawatt AI factory, which can go anywhere from 50 to plus or minus 10%, let's say 50 to 60 billion, we represent about 35 plus or minus of that, and 35 out of 50 or so $1 billion for a gigawatt data center. And of course, what you get for that is not a GPU. I think people, we're famous for building the GPU and inventing the GPU, but as you know, over the last decade, we've really transitioned to become an AI infrastructure company. It takes 6 chips just to build 6 different types of chips just to build a Rubin AI supercomputer, and just to scale that out, to a gigawatt, you have hundreds of thousands of GPU compute nodes and a whole bunch of racks. And so we're really an AI infrastructure company, and we're hoping to continue to contribute to growing this industry, making AI more useful, and then very importantly, driving the performance per watt, because the world, as you mentioned, limiters, it will always likely be power limitations or AI infrastructure or AI building limitations. And so we need to squeeze as much out of that factory as possible. NVIDIA's performance per unit of energy used drives the revenue growth of that factory. It directly translates. If you have a 100 megawatt factory, per 100 megawatt drives your revenues. It's tokens per 100 megawatts of factory. In our case, also, the performance per dollar spent is so high that your gross margins are also the best. But anyhow, these are the limiters going forward, and $3 to $4 trillion is fairly sensible for the next 5 years.
Next question comes from Joe Moore of Morgan Stanley. Your line is open.
Thank you.
Great. Thank you. Congratulations on reopening the China opportunity. Can you talk about the long-term prospects there? You've talked about, I think, half of the AI software world being there. How much can NVIDIA grow in that business? And, how important is it that you get the Blackwell architecture ultimately licensed there?
The China market, I've estimated to be about $50 billion of opportunity for us this year. If we were able to address it with competitive products, and if it's $50 billion this year, you would expect it to grow, say 50% per year, as the rest of the world's AI.
But you don't have 50 billion.
AI market is growing as well. It is the second largest computing market in the world, and it is also the home of AI researchers. About 50% of the world's AI researchers are in China. The vast majority of the leading open source models are created in China. And so it's fairly important, I think, for the American technology companies to be able to address that market. And open source, as you know, is created in one country, but it's used all over the world. The open source models that have come out of China are really excellent. DeepSeek, of course, gained global notoriety.
Oh, shut up! You
is
set
excellent.
up.
Kimi is excellent. There's a whole bunch of new models that are coming out. They're multimodal. They're great language models, and it's really fueled the adoption of AI in enterprises around the world because enterprises want to build their own custom proprietary software stacks. And so open source model is really important for enterprise. It's really important for SaaS, who also would like to build proprietary systems. It has been really incredible for robotics around the world. And so open source is really important. And it's important that the American companies are able to address it. It's going to be a very large market. We're talking to the administration about the importance of American companies to be able to address the Chinese market. And as you know, H20 has been approved for companies that are not on the entities list, and many licenses have been approved. And so I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thank you for the question. I want to go back to the Spectrum XGS announcement this week, and thinking about the Ethernet product now pushing over 10 billion of annualized revenue. Jensen, what is the opportunity set that you see for Spectrum XGS? Do we think about this as kind of the data center interconnect layer? Any thoughts on the sizing of this opportunity, within that Ethernet portfolio? Thank you.
We now offer 3 networking technologies. One is for scale up, one is for scale out, and one for scale across. Scale up is so that we could build the largest possible virtual GPU, the virtual compute node. NVLink is revolutionary. NVLink 72 is what made it possible for Blackwell to deliver such an extraordinary generational jump over Hopper's NVLink 8. At a time when we have long thinking models, agentic AI, reasoning systems, the NVLink basically amplifies the memory bandwidth, which is really critical for reasoning systems. And so NVLink 72 is fantastic. We then scale out with networking, which we have 2. We have InfiniBand, which is unquestionably the lowest latency, the lowest jitter, the best scale out network. It does require more expertise in managing those networks. And for supercomputing, for the leading model makers, InfiniBand, Quantum InfiniBand is the unambiguous choice. If you were to benchmark an AI factory, the ones with InfiniBand are the best performance. For those who would like to use Ethernet, because their whole data center is built with Ethernet, we have a new type of Ethernet called Spectrum Ethernet. Spectrum Ethernet is not off the shelf. It has a whole bunch of new technologies designed for low latency and low jitter and congestion control. And it has the ability to come closer, much, much closer to InfiniBand than anything that's out there. And we call that Spectrum X Ethernet. And then finally, we have Spectrum XGS, a gigascale for connecting multiple data centers, multiple AI factories into a super factory.
I can't stand CEOs like this.
And you're gonna see that networking obviously is very important in AI factories. In fact, choosing the right networking, the performance, the throughput.
I have to leave the call. I got to take off. I got something to do. Appreciate you guys so much. Watch the live stream from earlier today. These guys were terrible. Here's the thing about that CEO and what he's doing, okay? He's explaining every product. He's trying to sell you on every idea and why. Trying to mask that they only did 6%, that all they're doing with their cash is buying back shit. This is not even real. They're not even real. When you start, when your opening line is, we're here because the company we've been buying into is going to launch something. I'm sorry. Nope. CoreWeave is not the reason why this company is going to produce anything. And that was the opening line. Man, I wish GameStop would do an earnings report like that. Guys, we're doing great. We're selling more of this. We're selling more of that. And don't forget that we're going to do more of this. We got more packs coming. No, I don't want to hear nothing, bro. Just give me some numbers. Let me digest it, and then you figure it out. Anyway, go watch the show, guys. I'll do some more of those, those little videos I be doing in between the shows at night. In the middle of the night, bro, I be doing a whole bunch of little videos, just hitting you with them. It's funny. It's funny, bros. Hey, don't let me do that with two hands, bro. Okay, I'm just hitting you with them. Yeah, no, that's great. It's absolutely great. I think we did like 40,000 views yesterday. I'd be laughing, bro. I'd be laughing because you know what? It was 39,000 unique visitors to the show so far in the past month. That means 39,000 people want to know what GameStop's doing. Remember it. GameStop. Can't stop, won't stop, GameStop. We'll see you soon.